All right, testing. Welcome, welcome. Hello, hello. We are good to go. So, welcome to the live, guys. Just sending it out to all platforms and thought I'd hop on, have a little bit of a chat because, the markets haven't been that amazing in London session lately. A lot of people have found that the case. So I thought I'd hop on, answer some questions. Maybe we can taper the next macro. We'll see how we go in terms of the markets, but nothing too much in terms of what we've seen. So I'm going to get all this all set up and then we'll come back in just a sec. Alrighty, perfect. So if you have questions, post them in. Last macro didn't do too much. This one here is a little power 3, but nothing I personally really liked in that segment of price. And to be honest with you guys, a lot of London session hasn't been that good for my model. There's been a lot of break-even days, a lot this week, if not all. And Asian session has been the breadwinner, if you want to call it that. So it is pretty interesting to think about, but it's what's happening at the moment. Welcome everyone, welcome. Got a few in here. But yeah, ask me questions. If you've got questions, happy to answer. I was going to go live tomorrow, but I thought, we'll go today because I was going to have a community call yesterday with Discord. But I think what I'm going to do once a week, I'll go live on YouTube. Probably either on a Thursday or Friday, depending on how the week goes, and more than likely to be around this time. It could be different, but for me here in Australia, it's about 5:40 p.m, so it's quite good. At the moment though, like we can look at a higher time frame, there's really not too much happening. If we go say into a 15-minute or a 5-minute chart, that's the range, right, that we're currently sitting in. Obviously, there's a 15-minute gap we're sitting in also, which is fine. But realistically, there's so many potentials here that could happen. To me, it still looks bearish. To me, it still looks we're going to head down. We're going to head down here somewhere. And obviously, the next macro is coming up soon. So overall, what I'd like to see is price do something like this. Overall, something like that. Got about 20 here. Wow, that's jumped up quick. Welcome, guys. Any messages, send me in the chat. Happy to help out. But yeah, this is what it is, right? So interesting, right? Interesting price action. Looking for something like this. I was mentioning to the Discord, we just topped off a call recently that we could go up from either this 15-minute gap or the next 15-minute gap. Both are feasible, right? So any 15-minute gap can act as support or resistance. We know that. But it's a matter of having the combination of the higher time frame and the lower time frame too. So the higher time frame for me is the 15-minute, the lower time frame is the 1 minute, and combining that with a macro, even better, is what I'd say. So that's kind of what we're looking at. And this stream, I've only come on for a little bit, but this stream will be uploaded after anyway. So if you want to rewatch it, that's fine. All right. All right, let's roll. So yeah, my thing now would be we're just going to see what we do from here to the macro, which is coming up in about 8 minutes. A lot of people ask me, they'll say, Ruben, can I trade now? Yes, you can. Can you trade before a macro, after a macro? You can. Yes, you can. Yes, yes, yes. But you have to have data collected on those systems. But that's the next range, right? Use ranges to your benefit. Use fair value gaps to your benefit. On the 1 minute chart, there's nothing there telling us anything. There's nothing there telling us anything. It's kind of like this, right? Now, my query or concern to go long from this area would be, what if price does something like this? So even if there's a long position, my query would be, or my concern, price could do exactly what we did here, manipulate up and then still sell off. This is called barcode price action. This is where capital preservation comes in. This is where you've got to be able to, sit in your hands, be able to just watch the market and let it do its thing. Otherwise, you waste unnecessary capital. And a lot of people have felt that way. Like I've been reading the Discord, a lot of people have felt that way, that this week and last week, and I agree. For London session traders, wouldn't be the best weeks. There's been better weeks. So if you trade multiple sessions, my advice would be, while London session is still not that nice and maybe a little bit more choppy, trade other sessions. If you can only trade London session, it doesn't mean you have to trade it. That's the thing. You could go a couple of days without trading, or you could just half your risk. So for me, even when I trade Asian, I've been trading one mini. For me, that's lower risk. You might be using micros, 5 micros, drop your risk to 2 or 3. And that way, regardless of what happens, if you win, it's a smaller win, you're still winning. If you lose, well, it's a smaller loss and you're controlling your risk, which I think is quite important. So you can see how the market is just, chopping around. And it makes you wonder, in these situations, and I've been here before in these situations, and you might feel like you want to trade, you might feel like you have to push that button. It's not the case. Use this time, to study. Use this time to practice, patience. These are the times to do it. So we've got a macro in 6 minutes. We're going to see if we have any volatility as we approach the macro. Now, while we do that, I do have a video coming on YouTube very, very, very soon. It's uploaded now. It's got to post it. I've got a flowchart I'll be putting in the Discord. What I've actually done, so for those that are watching this now or later on, what I've actually done is this. So if you go into the Discord, have a look, right? I've changed this to free education. That's going to have the checklist. So that's the checklist. There's also going to be a flowchart in there. It's just a flowchart I made based on my process of building up a buffer, right, with a funded account, with one of my funded accounts that I'm waiting for a payout on. So that'll be in here too. If I forget to send you PDFs and you want a PDF, just keep reminding me, because I do get a lot of messages. And I'll try to get back to everyone, but if I don't respond, or I respond but you're expecting something, just send me another message and I'll get it back to you. So that'll be all in here. Calendar, this is like the community core announcements, that's fine. Charting study, I've been posting almost every day because I want to show you guys that, look, it's not always wins. Like we do this, I do this behind the scenes, we do this with the Discord community, whatever, but it's not always going to be winners. There's going to be winners and losers, everything in the mix. Welcome, hiya. And this just shows you it's not always wins. You might have taken some of these losses, some of these wins as well. Like that's completely fine. But this will kind of show you the process. So the Discord's probably going to stay as is. I don't think much there is going to change. But that's all going to be there, right? So there'll be more stuff posted in here, more stuff in here too. So I got a lot out for free, right? The premium, we just go live on Zoom. We do something very similar to what we're doing here. Talk through the markets, usually 5 days a week, plus there's other education. Just want to say appreciate. Yeah, appreciate that. Appreciate that. Appreciate that. So we're coming into the macro now. It would be nice. Something like this would be good. Treat this as accumulation. Sweep these lows and then react back up during the macro. That would be good. ES doing a similar thing. So ES has swept the low. So I'm going to keep that in mind for potential SMT. I'm always watching as we get close to the macro. We can get them side by side. But I was saying to the premium community today, like you got to, whatever concepts you don't understand, you've got to try and apply them to the markets. So if you don't understand like certain PDRAs, you got to try and find examples of those in the markets and then apply that to the markets, if that makes sense. So, when we're looking at price action, when I'm looking at price action, all I need to answer is not with 100% certainty. I need to come to a conclusion, and so do you guys. Where do I think the market's going to go? And then once I have that belief, with what probability do I think it's going to get there? Now, some sessions I'm like 80% confident, but it's never going to be 100%. It can't be, right? Other sessions it's 50-50. A lot of people think you've got to know exactly where it's going to go all the time. It's not the case. Just find a repeatable process. There's plenty on my YouTube channel. All the stuff on macros, fair value gaps, liquidity, and then apply that to your charts. Apply that to your charts and find examples. That's the most important thing. So I see two options here. Two. We form SMT, we invert something here, change in the state, we move higher. Or we sweep the sell side, then look for an inverse, change in the state, and we move higher. That's what I'm seeing. That's all I can see, really, because at this point in time, there's no, I'm not looking for shorts. I'm not going to go short this low down in the range. I'm waiting for that reversal, that pivot. That's what I'm waiting for here. Welcome, Ken. Welcome. So yeah, typically I'm not really on the markets this late, but what I've found and what I've noticed with the community this week, especially if you're from the community, hello, welcome, is the start of London session has not been good at all. It's been very slow, and often it'll start to open up a bit later on. So what I kind of look at, this is a 15-minute gap, by the way, this box. I don't really need that there. It's a 15-minute gap. I'm just looking at ES because ES has swept this low. The NASDAQ hasn't. So I'm keeping in mind that there could be SMT. And then this bearish gap here is important to me, this one here. To see if we invert that and create a change in the state. That's it. But if you have questions while we're watching the market, send them through. This is probably something I'll do once a week or once a fortnight. It won't always be live market reading. It could be just discussions. But we'll be discussing price action, or maybe going through a topic. It does look messy. See, on the 15-minute, in terms of your question there, do I worry about the 15-minute CB? I mean, at the moment it looks bearish, but it doesn't concern me. I still do believe that price will step down, but it's going to step down to move up. In hindsight, you can look here, that's like a good short from there. But if you miss that short, if you don't like that short, then you just got to leave it. I'm more looking for a pullback to then swing back up. Price looks messy, yeah. Do this often, yeah. Even if it's not live market reading, something like this is discussions in the market. I don't mind doing them. So we're in the macro now, which is fine. We'll see if that SMT holds at the lows. It's definitely not a week, to put risk on. Definitely not. For London session, no. Like a lot of Asian session and New York session, if you trade that, obviously there's been some good opportunities there, but I can't really say that London session this week has been a risk on opportunity. No way. What about gold? I mean, we can have a look. Sometimes I have a look at gold and I just have a look to see what it's doing, but I'm assuming gold futures, right? My TP is at the low. Gold's very volatile, isn't it? So you can look at all the same stuff on gold as you would on the NASDAQ. In terms of how many instruments, just one instrument. Just the NASDAQ. I use ES to see if there's any confirmations like confluences or SMTs, but I'll just use one chart. That's all I use. Just the NASDAQ, always traded it. We'll see if we invert anything, have a closure above here, then we can tape read that long. Have a look. Do you look for daily bias? Not really. My level of daily bias is literally on the 15-minute chart. I look for fair value gaps. I look for ranges like optimal trade entry. And I treat those as almost like support and resistance. And then in a macro, I'm looking for inversions and changes in the state delivery. That's it. Trying to target low resistance liquidity. Used to trade Forex, but not anymore. I used to trade GBP USD, GBP JPY, I think New Zealand dollar as well, and Euro USD too. So we're going to see if this SMT holds at these lows now. SMT. See if we create an inverse change in the state. Now the interesting thing about this, right? So if you go to like a 5-minute chart, this swing high forms inside that 5-minute gap. You've also got this 5-minute gap up here, as you can see. And we'll see what it looks like on the 1-minute chart, so we get a bit of reference. Why don't I trade Forex anymore? Commissions was a big thing. But also, when I started watching ICT too and learning the 2022 mentorship, he just traded the NASDAQ and futures. So when I learned from him and also from my previous mentor before I started my own stuff, they all traded the NASDAQ. And the guy I learned off, he just traded NASDAQ too. So because of that, I used to actually trade Forex during the London session. And then I used to stay awake for New York. But being in Australia, it's not really feasible, is it? It's too tricky. I mean, right now it's about 6 o'clock at night. New York session opens at 11:30 p.m. And eventually it opens up much, much later. And it'll go through cycles. Like I feel like, same with any session, it'll go through cycles where, you know, the New York session will be good, or Forex will be good, or gold will be good. But the main thing is, like, whenever well, it goes in both ways, right? So if you trade Forex or gold, say it's been really good, Forex, gold, silver, whatever, stay very level-headed and keep following your rules. And the same would apply if you trade futures and maybe it hasn't been that great or choppy, you still got to follow your rules. This live will be uploaded anyway after, yeah. Welcome from, yeah, I've got a few from Europe, Poland, yeah. Crikey. Either you're Australian or you know Australian slang, either one, but either one's fine. Same for me right now, it's 12:55 a.m. I trade kangaroo. Yeah, I ride one every day to the shops. I got one as a pet. And what I'll be watching here is the 4 o'clock, right, to see if there's any impulse on 4 o'clock. We're still chopping around, but no, I'm from Australia. But a lot of people I coach or mentor, they are from Europe because the time zones work out quite nicely. Or from Australia. Like if you're from Australia now, it's 6 o'clock. So most people are home from work. And London session's probably the most accessible for those that do work. Otherwise, Asians like during the day, so it's not really feasible. I don't think it's worth sacrificing sleep to trade, in my opinion. I used to when I was doing forex in the London session and then futures in New York, I used to go to bed at about 9 o'clock at night, wake up at 1 o'clock, 1:15 in the morning, watch the open, trade until about 2 a.m., 3 a.m., and then go to work. And at the time when I was learning, yeah, I'd be doing all the overtime. I'd be working heaps. It was very, very difficult. So I know exactly what it's like to be in that position. So I know for some people in that position it's tricky. But what I realized is that it's not worth it. And that's why like I made the switch to London and Asian, because it was more accessible with work at the time. And so I said, look, I want to still have a good sleep but still trade. And so I spent a couple months, like 2 months, just learning how London worked, and then that was it. New South Wales, in a place called Wollongong. So you might know where that is, but people from across the globe probably thinking, "Where's that?" It's near Sydney. So if you know where Sydney is, it's down a bit, about an hour and a half drive from Sydney. So there you go. That's pretty interesting. See, in this situation here, inversion change in the state, what would you do? Up here, you'd have to go to break even. You'd have to, or take a partial. What else? 10 a.m. in South Africa. Wondering, are you in need of video editor or guy? I mean, I'm open to it. I'm open to it. If any of you guys here are, you know, I'm open to it. Middle of nowhere. Yeah, it's a weird name. It sounds very weird. Sometimes you get an entry in the macro time window without an inversion. Should we take it? You can, but as long as the draw on liquidity is still there. So say for example here we're in the macro, right? So it doesn't matter. But if there was something that came like outside of the macro, then my advice would be: is your draw on liquidity still untouched? Do you still have an entry? And if yes and yes is ticked, just reduce your risk. That's fine. That's fine. You know what I mean? You can send me an email, or you can, if you've got Discord, send me a message on Discord, or email me. It's fine. That's all good. Or Instagram, send me a DM, whatever's fine. 10:56 here in Egypt. I can trade London and New York. That's good. It's good being able to trade more than one session. For me, it's Asian session, London session, right? So we'll see if we react from this area up here. So that there, for those that joined like just recently, there's SMT at the lows. That's the line. So if you go into the 1 minute chart, I'll show you. Look, you can see the Nasdaq is making lower lows. Opposite. ES is making lower lows. The Nasdaq's making higher lows. That's what's called SMT, and that's like your inversion. But you pair that with a change in the state. A change in the state is when price closed there on that candle. There. And that's probably a partial. Does that make sense? So that's kind of the framework. But it's difficult because what I was saying before is we could just sell off from here. Notice how in the past, look, see before we went up like this a little bit and then we dropped down very aggressively. That could happen here too. So you always got to manage your risk appropriately. Living around in Asia, around Australia is hard. Volatile sessions are around sleeping time, yeah. See, you can trade London, you can trade Asia. A lot of people think you can't, but there's enough. There is enough volume. Like lately, London session's been a bit iffy, in my opinion. It's been definitely a bit iffy. But as long as my best advice for anyone would be to use higher time frame ranges. And if you can be an optimal trade entry of a bigger range, you can get a really big move, regardless of what session. That's my advice. Because it doesn't matter what session, go back in your charts. If you're in optimal trade entry of a bigger range, you're probably going to move quite a bit. That could be London session, Asian session, New York AM, New York PM, end of day macro. It doesn't matter what session. That is what gives you the biggest pull, being in that higher time frame, the high time frame range. This could just be a mimic of up here. So we could invert this and then just sell through the lows, similar to what happened here. Does that make sense? Send me a DM. Send me a DM. Do you ever look at AM hindsight though? In the morning, so my routine in the morning, I wake up and I have a look at I have a look at what the Discord's been doing, and then I have a look at the session, right? The previous session. How PM session closed. I have a look at AM session and go, oh, yeah, how did that go? I don't trade it, but I still have a look to see what happened, and that's pretty much it. I don't really do too much projections in terms of this is where I think the market will close or anything like that. I don't really do that. I just go with the flow. 100%. 100%. This looks like a remake of this. To be honest, see this? Compare the structure. Look, compare this to this. It's very similar. Very similar. But this is a good illustration. So a lot of people are going to say to me here, well, how do you manage this, Ruben? How do you deal with situations like this? Like, let's say you take a long position from here and your stops below the bodies. Yes, you could go for a 1-to-1, but it's not 10 handles. Some people, that's fine. They'll take less than 10. I prefer to take at least 10. So in this situation, it's like, okay, you get stopped at break even. What do? You just reassess. And if you find an entry in the opposite way or an opposite entry that you like, then you go for it. But there'll be times where, I know some people went for a long here, using, say, this inverse fair value gap here, and you might have entered here, put a stop loss below these bodies. In my opinion, if you're in that and price comes down and pushes through this high, why is your stop loss still here? Go to break even. Because what should happen after pushing through here, then if we're bullish, we should push higher. But what's price do? It reacts from this bearish fair value gap. The same thing happens here, right? So you see SMT, you see an inverse, that's fine. You enter, price pushes up, sweeps a high, pushes up. After sweeping a high, you don't want to see a rejection. Rejection means we're moving lower. You want to see price expand. And that's how you save yourself. Yeah, that's it. It looks very similar. Like if you look at price action, if we just remove this for a second, have a look at this. So we're going to call that accumulation. We're going to call this also accumulation, like this. Right? These are manipulation moves. Now, you don't need to necessarily know the manipulation moves. You can participate in manipulation. You can do that. There's nothing wrong with that. But you have to accept that it could be manipulation. So, like I was saying here, you enter a trade here, you enter a trade here. You have to accept that the trend, because of the higher time frame, could be digging down into the bottom portions. So you've got to go to break even quick or partial when it's appropriate for you. In situations like, let's say price is very far down, let's say price did eventually get all the way down here. If price comes all the way down here, then in my opinion, I wouldn't even be thinking about shorting it. But because we're still in the top portion of the range, any long is a counter trend scalp. You always have to mitigate risk quickly. And the way I see it is this: if you mitigate your risk and you go to break even, and you get break even, that's fine. If you don't mitigate your risk, you're doing yourself a disservice. And if price surprises you and the sell program is over, it's over. You don't need to predict it. You just got to watch the market and see like what it's showing you. When it sweeps highs, is it showing us really that it wants to move higher? When we sweep this high here like that, and then we close in this candle, does it really show you that we're going to move higher? Probably not. If not, by this candle close, you should be out anyway at break even, but you can tell. You can tell kind of the process. And that's it. You know what I mean? So in these situations here, my narrative is to look for longs. So for me personally, in this chop, like we're on the call with the Discord and nothing was happening here. So we're just having a chat about psychology, a few of the bits and pieces. The way I see it is this: if your narrative is short, you make money here. I think, I don't know if John's here from the Discord, but you mentioned a trade up here. A short from up here. Beautiful trade. Beautiful trade. if your narrative is not short, you don't make money. It's always going to be one way or the other. You know what I mean? So stick to what you want. If you want shorts, only look for shorts in this scenario until we get to a point where you're looking for longs. For me, I'm happy to look for longs based on the fact that we're still in that 15-minute FEG, but I can appreciate that it's a bit more risky. I can appreciate that that it can just be a counter trend scalp. So as time goes on, I guess I'm less concerned with being right, and I'm more concerned about managing risk. That would be a big piece of advice too. Get really good at managing risk, and that applies to both good days and bad days, or break evens and winners. So for example, if say John or anyone else entered a short here, in terms of risk management, get good at knowing when to hold price. Get good at knowing when to hold your trades and when to cut them early. That's a really important skill. So risk management is not just when you're having trouble, it's also when you're going very good. It applies both ways. Second distribution, yeah. And I'll have a look at the email a bit later on after I hop off here. Let me know where is everyone from? Where's everyone from? Is everyone from Australia, Europe, Asia, South Africa? Where's everyone from? Anyone from America, Canada, Hawaii, maybe potentially. That can happen too. I know for some people listening to this, it might be very, very early. Like if you're from New York, it's 4 a.m. in the morning. Perth, yeah. So Perth's a couple of hours behind us. That's cool. Queensland, same time, I believe. New South Wales, Europe. There you go. Oatley, Carly, yeah, nice. But that's really important. So any questions you guys have, psychology, trading, post them in. And as we watch the markets, I want to point out that really important element here. And let me know if it all makes sense. You know, if the market is trending down and there's fair value gaps and liquidity below that it could target, Philippines, then any trend or any counter trend trade that you take needs to be mitigated quickly. Any trade that you go with the trend can be held a bit longer. Does it make sense? So for example here, right? This is one from yesterday in Asian session. If you take a continuation trend from over here in Asian session, we've established a bullish trend, you can try and hold it a little bit longer. When you take reversal trends, then you've got to kind of just go to break even quicker and demand that price act quicker, because it'll tell you, like price tells us pretty quickly what it's going to do. So let's mark this out now. Sell side sweep. I'm interested up here. If price can close above this area to push through. Let me just go to the 15-minute chart. And let's mark out on the 15-minute chart. Very interesting. Yeah, cool. All right. Bouncing off the 4 FA value gap, Europe, SMT. We've got the globe here from across the globe. It's good. And yes, SMT, so lower lows here on the NASDAQ and then higher lows here on ES. It looks like quite a bit of good impulse there, to be honest with you guys too. That is now like a change in the state of delivery, what we just did, which would indicate bullishness. So we came down, we swept this low, boom. We kind of trickled around this area here like this. There is a little inversion gap here. And when price closes above the last set of down close candles that form the sweep, that is the CISD. And as you mentioned there, SMT, because the NASDAQ here is forming lower lows and ES is forming higher lows. Now, people might say, well, what do you do here? Like, if you're in a situation like this, what do you do? Obviously, if you're like, oh yeah, that's enough for me, then you're doing something like that. But if you're using the change in the state, then you kind of have to demand that, again, what happened last time? We swept a swing high, and what happened soon after? We displaced like this. So you want to see at least this gap remain open. If this gap closes, we're probably moving back down again from this 5-minute gap that rests above. So when you form multiple legs or multiple gaps inside a leg like this, you have your change in the state. You've got to always keep that in mind. Yes, you got an inverse, you got the change in the state, but if you're entering a move higher up in a range, you kind of have to demand that it doesn't dip too back, too far down in the range. You've got to demand bullishness in that situation. So there's a few FEGs, right? I'll mark them out, including the volume imbalance. So number 1, number 2, and number 3, right? 3, right? Depending how you mark them out, but there's three FEGs. It should just be full view trading. Full view trading. Up here, there is a 5-minute gap. What I'm kind of curious about is there's a few things, right? I'll mark them out for you. Number 1 and number 2. So when you're looking at a move and it's starting to progress, you're looking at bearish gaps on the way down and you're watching to see what price does. You can even mark out this too. That's fine. That's a bit further up. And this is on the 1-minute chart too. So we're not, I typically these days, I won't even look at the small time frames. I used to try and, look in the 30-second, 15-second, but I think for London session, the 1-minute chart is pretty sufficient in my opinion. But that's the way I see it. So we've got 3 gaps. Ideally, you want this one to remain open. There's 2 ways you can approach that then. You can be very aggressive with stops. You can go, oh, well, you know what? Like, say, for example, if you went long over here and you got stopped to break even, you can be very aggressive again with your stop loss. There's nothing wrong with that because remember, you can always take another entry to the trade. You can always take a re-entry. But once your stop loss is taken, you can't get that money back. You've got to make it back. Does that make sense? Asia low was swept a long time ago. This is Asian low. Well, not even Asian low. Asian low is here. One of these lows here. Sub 1 minute after night. Yeah. If you trade New York session, I think using the 1-minute charts and below is not bad because there's enough volume in the market. Cam, I think that's a good idea. See, with New York session, you can have what? One candle that's about 30 handles in size. With London session, what's the chance of that actually happening? Could, like it does sometimes, but not that often. Just sold now, full port. I don't know when you sent that money, but hopefully not. Hopefully not. So a lot of people ask me like, what do you do? Like, what's the range? Like how much do I target or what I look for? 10 handles usually is what I look for. Minimum has to be at least 10 because what you got to do when you're trading is you've got to collect data on what your average stop loss size is. And this is probably an important point. Collect data over a few months or a month. What's your average stop loss size? And then from that, you can go, okay, how big does my average win need to be? Like we're talking about in the Discord, and for most people for London session, it's between 6 to 20 handles on average, which then means, let's just say on average, it's like 12 and a half, 13. That kind of means that, 10 handle trades are fine, but you need to get a few of those. The issue I have, and that's the issue with situations like back here, if you go for a long back here and you go, oh, hey, Ruben, I took a 1-to-1, like you said, you're only taking 6 handles. It's not enough. And then you could take 1 win here and then take 3 losses at like 15 handles each. You now need to make so much more back in trades like this. And there's situations where you're better off just taking a BE, taking a break even and then leaving it and coming back in the next opportunity. Does that make sense? Next opportunity is already here. It's from the CISD. We've inverted the gap. You wait for the CISD. You want to see that, that gap remain open. You take your 10 handles. That's it. You're done. And now you can hold runners. Why would you hold runners here? Because we're quite impulsive and it looks like a little power 3 situation. So runners to any of these highs are fine, or any of these gaps. And people say, well, what do you do now, Ruben? Like if you took 10 handles, how do you trail your stop? What do you do? Move it so it's in profit. If you're in another contract, move it below the order block here. So regardless, you get, in this situation, your entry's here. If you move it to 5 handles, you get another $100 with 1 mini. Perfect. And if you get stopped at 100, who cares? You've taken 10 from the market already. You've taken like a little bit of juice and you're sweet. New York is sketchy in 1 minute. Go down a few intervals of 5 seconds. Yeah, that's fair enough. I know a few people that do trade that too. Like the smaller time frames. Even London, I couldn't do it London session. I couldn't do it. But this is a good discussion point, because people will say, well, what do you do, Ruben? Like how do you know where the stop would be? Like I was saying, when price is up here, you want to see this bottom one remain open, right? This one. When price is up here. So what does that mean for the stop loss? The stop loss should not even cover that. But you're entering ideally from the change in the stat. I know some people would be entering here. For me, that's not really enough. You're entering from here. If you're entering from that position, then in my opinion, below here, 10 handles is fine to start. You can start with like a 10 handle stop. And then as price pushes up like this, you go, okay, I'm going to demand that it move quicker. And you can drop your stop loss or mitigate your stop a little bit and move it up. Now notice how both are very similar frameworks, and this is what a lot of people struggle with. A lot of people think that the first attempt on something has to be correct, and if it's not correct, I can only take 1 trade a day and I'm done. Not the case. This is a perfect example of that. I don't see anything wrong with that. Putting the stop below the bodies, but you would have been targeting 10 handles. You don't get it. You get stopped at break even. We sweep more sell side. We form another inverse. We form a change in the state. That becomes the next opportunity. Like this. 10 handle stop should be sufficient. Even if you had a stop here, right? You can do that. It's fine. That's like 15 handles almost. But what should happen when you enter a trade, you can have like a wider stop loss, but then it should be dropped very quickly because you want price to move quick. By this point, you've missed the move. So people are going to ask me now, like say we're outside of the macro, hey Ruben, I want to look for longs. Can I take longs? It's too risky. Why is it too risky? Because we've now pulled up into the top portion between this swing high and this swing low into this range. We could easily just pull back now, and that pullback could stop you out. Short, yeah, that's right, man. You were full pointing shorts, that's right. We could still sell off from here, you never know. Back in OTE, the range. But that's typically what a day would look like. In situations like this, you're not going to have winners every time, but you've got to be able to say to yourself, okay, the framework is still there, the impulse is still there, we're still in the macro. This one here's the macro, this one here's also the macro. What's the difference? Well, this trade framework, the original one, was SMT the lows. This one, we came and swept the low, and then we reacted from that point. So it's all about perspective. It's all about perspective, because this trade here, it's SMT. This trade here, it is sell side sweep. But there's also SMT at the lows here. Both are fine, both are valid. One did not work out. One did. But this is why 10 handles is great. And 1-to-1s are great. In conditions like this, 1-to-1 is probably what you're going to get. You might get a bit more, but 1-to-1 is what you're going to get. And that's completely fine. But in some conditions, when the market moves a bit nicer, you should always try and go for a little bit more, because, you know, you can have an average of 1-to-1 to start, but you can build that to a high risk for a wall, which brings you more profits in the long run anyway, which is quite good. But we can break this down, you know, from the very beginning, and you could still be in a trade here. You'd be a break even or below the order block, I think I mentioned. You break this down. That's the macro, and then you look at the 15-minute chart. I mentioned to my Discord earlier that price could do this, or price could do that, and I don't know which one it's going to do. And I said to him, even if price does this and moves up and goes down, and there's a losing trade, I'd still look for longs down here. I've seen both happen. And the fact that we're in a 15-minute gap means there could be support found here. How do you confirm that on the 1-minute chart, Ruben? How do you confirm that? I confirm that we're looking for 1-minute PD arrays that signify bullishness. So the narrative is built from the range. The narrative is built from the 15-minute gap. The entry is built from the PD arrays in the 1-minute chart. Does that make sense? That's kind of, yeah, that's what it's all about. So this first setup, I don't think there's anything wrong with it. You know what I mean? There's nothing wrong with that. There was SMT at these lows. And I'm pretty old school. I don't really use too many indicators. I just draw it out myself, which is cool. SMT at these lows, we had a inversion fair value gap here. And we also had a change in the state of delivery. A change in the state is a closure above these down close candles. So right on this candle here. But that did not yield 10 handles. So it's a break even. Then we sweep more sell side, right? Like this. And you just watch. You know, price could have sold off. It could have sold off from you. It looked like that. It appeared to be that way. But you just let it do its thing. And price swept that low. And here's an important topic for you to look at. We just swept it and we rejected straight up. That's a good sign. And we're in the macro too. Is an inverse fair value gap here enough to discuss? No, because I don't trust it yet. Because of that massive drop down, an inverse gap could easily be rejected off this order block. So if you have a situation where you don't trust it that much, just wait for extra confirmations is my advice. And that extra confirmation is the CISD here. Like that. And your question before you enter the trade is, can you get 10 handles? Can you get a 1-to-1? If the answer is yes, then you take the trade. If the answer is no, maybe you look for a re-entry or a different entry model. You could even have a 10 handle stop here. Or you could have a bit more, even below this candle, whatever you want. But below that inversion gap candle is sufficient. You take 10 handles. You go to break even. Or you move it below the order block. And maybe you get stopped out there, that's fine. You still got 5 handles extra. So here, Ken, in terms of this CISD, I don't mind that. But a lot of people say, well, where's your stop loss go? In this situation, like I was saying, when you've got multiple bullish fair value gaps here, 1, 2, 3, 4, or 1, 2, and 3 by the time you do that, ideally you want to see some of these stay open, because if you're bullish and you're creating a CISD, that's meant to mean something. So yes, by all means, you could do this. Like normally the stops would be below the bodies, but then the stop would need to be 15 handles, which would mean you're targeting that for a 1-to-1. Or you can demand price be aggressive, which you should expect it to be based on the CISD, and drop the stop a little bit, you know, so to 10 handles, and then all you need to do is take 10 for a partial. And anything else is like a bonus. any one of these sell-side imbalances on the way up here is a profit-taking zone. Any higher time frame range, so like from high to low, if you mark out a range like this, from high to low, anytime we're in OTE, you can take profits. Anytime we peak out of OTE, you can also take profits. Sweep a high, take profits. But that's enough. Like you don't necessarily need more than that. That's enough. So that's framework, but both are valid, Both are valid. It's just a matter of being able to come back and take another setup. But for a lot of people, they find that tricky. And, when we close so high up in the range, you've got two options. Either don't take the trade or have the stop, like this. But you've got to have the narrative in your mind as to why you don't want price to come back down. And the answer that I have is we've created 3 bullish fair value gaps. We've created a massive CISD. If price is bullish, why should it come back down here? It shouldn't. So if it shouldn't come back down there, the stop needs to reflect that. There's no point having a stop loss down here because that would mean if you have a stop loss down here, you're saying that the market could still be bullish and close like this. No way. If we closed here, 100% we'd be moving to the low. So you've got to put it in perspective and have probabilities and then just take what you need from the market. And that's scalping. This here is scalping. On other days where, price is much lower down here, you just hold massive runners and try to target, massive highs. And that's how you build your profits. That's how, you might take 80% 1-to-1s and 20% might be 1-to-2s or 1-to-3s. And that will really add up in terms of building like a buffer, profit buffer. How often do I go live? I don't know, I haven't really been consistent. I'm trying to do it once a week. It might not be always like live market reading, could just be discussions, end of the week kind of thing. But I think I went on last week or the week before. We have 5-minute fair value gap above, half mitigated, expecting reaction. Yeah, and that's the thing too. So I think I mentioned that before, this 5-minute gap. So you can see how that looks. Look at that. That's a 15-minute gap here. Look. Price finds support and resistance at fair value gaps. It's as simple as that. Don't overcomplicate it. Keep it simple. We tap into a 15-minute gap. We're inside of a macro. We've got liquidity to target. And there's a reaction. It's a trade. And if we close above here, then we have a 15-minute inverse too. And I think the all-time high is up here. So that's that. So you can see how you can squeeze potentially a little bit more juice out of trades. But you don't have to. You can just say to me, hey, Ruben, I just took 10 handles and that's it, a 1-to-1. Who cares? And even if price goes all the way to all-time highs, it doesn't matter. You've taken something from the market. And then if that's you use the rest of this time to tape read the market and get experience in the market and see what it does. And then document that. What's the idea behind macros? Well, macros are just a time window. They're a time window where, I've learned off ICT, but I've also noticed that important things happen. One of those important things is that we reverse around the macros, which you can see here. Not always, but it's something that I've noticed happens more often than not. And so all I've started to do, and I do, is I've built a model off that. So a lot of people like macros, including myself, because it allows you to narrow down the time. It's easy to potentially understand PD rates. It's easy. You might come to me and say, Ruben, I understand what a breaker block is. I know what a fair value gap is, but when do I look for certain things? Use macros. Because yes, you got the silver bullet. That's 1 hour. But what if you could narrow that down to 20, 25 minutes in time? And they exist 10 before and 10 after every single hour around that time frame. So learn from ICT, but I've done my own research like everyone does into them and they do work. And that's the whole, I reckon 85% of my trades are based in macros. 15% will use market structure, like fair value gaps, liquidity zones, and things like that. So it's all it's all feasible. That's a good question. So you can see how that looks, 15-minute gap. Could price have done this and gone down? Yes. And if price would have gone down, what I would have done is waited for the next area OTE or 15-minute gap, and then just look for the next macro. That's it. That's it. Very simple. Like, my model is very simple. Your model, you should be able to describe on the back of like a business card, they say. All I do, if I was to summarize my model in a couple sentences, I look for areas in price where price can react from, fair value gaps, OTE. When price engages those areas, I look for a macro to be present, and I use an inverse and a CISD to enter. Boom, targeting low resistance, that's it. That's all you need. There's other strategies, right? But that's just a summary of mine. And then you just stick to one thing. If you don't stick to one thing, you won't collect data, you won't get confidence in that, but stick to one thing. But now it'd be too late. Like, if you're like, oh, I want to enter long, it's too late. You just got to watch it, tape read it, and mark out what I was marking out before. So the framework being, in this case, the sell side sweep, which is fine. Sell side sweep, inversion gap, which is here, and then the CISD, like that. Now notice how it's quite interesting. This framework actually happened in the 350 to 410 macro. Typically I'm off. Typically I'll look at the markets from here and here, and then I'm kind of done. So the price has been opening up a bit later, which is something to keep in mind if you're trading the London session, in my opinion. But any questions, post them in. This recording it'll go live on YouTube pretty much straight away. So straight away after this. And whatever stage you're at, all right? Whatever stage you're at, you just got to keep going. Keep moving forward. Keep applying things, keep learning. Not at the moment, not daily at the moment. So I do, but every once in a while I'll hop on to live stream. It won't always be London session, like it could be other sessions, maybe Asian or bits and pieces. Cam says you found recently that using the 4-hour opening price as a premium discount scope. Yeah, that's cool. Any way to use premium discount, whether it's opening, closing prices, ranges, is beautiful. Like, that's one of the most easy concepts, like going back to the mechanics and basics of market structure. And that applies for any market. It's not just futures. Any market it works for. London session's what I trade. And these are typically the setups I look for. Very similar. It's the same stuff. It's always the same stuff. It's like, if you break this down, if you break down this framework, if you break down what's happened here, right? This is what we've done. This is why the trade is the trade. High time frame fair value gap, sweep of liquidity, SMT, inversion fair value gap, CISD, macro. That's it. That's all that is. That's this. And so was the other framework. Same thing. And I've got the checklist. Like, I've got this checklist. Have a look at this. This checklist is exactly taking you through that. If you follow that, you're going to pick out high quality setups. I think there's 6 or 7 things on that list. 6 or 7 things. And if you can get at least 5 of those things, you're in good hands. 4 of those things, it's okay. 4 out of 7. 3, you probably shouldn't take the trade. And that'll help you siphon out when you should and when you shouldn't trade. Pairing that with macros, you should be sweet. So that's what I'd say. I'm going to stay for a couple more minutes, guys. Any more questions, post them in. But that, I'd say, or those 2 setups, that's the trade for the London session, in my opinion. That fits my model. Like, yes, there's shorts here too, right? Don't get me wrong. But for me, that fits my model. That's a trade, or these 2 trades here. Any questions, post them in. If you're not in the Discord, hop in. The link will be in the description of the video. It's free. I've got a Telegram too. I post snapshots there, Twitter, follow me there too. You can always, ask questions in the Discord. People are happy to help out, which is fine. But like I said to a lot of people, if you found this week tricky, yeah, it has been tricky, to be honest. Today maybe is one of the best days of London session in terms of price projection. But that's pretty much it. So whatever stage you're at, like I said, you got to keep going. Trade for yourself. Don't worry about trading with other people, or for other people, I should say. Because in reality, you're the one pressing the button, so am I. So what someone else does, how much someone else makes, how often they pass an account, it shouldn't concern you. What should concern you is, are you following your rules? What areas do you need to work on, and are you working on those? And be real with yourself, If fear is something, work on that. If greed is something, work on that. Start with a couple of days and then build up from that. Start with following your rules for 3 days. If you can do that, then go to 5. Make that commitment to yourself to follow your rules for at least 5 days. You've got to be able to do that. Just 5 days, and then find the courage after and the confidence. You'll see the results change. Now, I'm not saying you follow your rules and you'll have, a green week every week. It's not going to happen. But you follow your rules for 5 days, you're not going to have as red of a week as you would have if you didn't follow your rules. Simple. Can you go with my fund of futures? Yeah, I love them. I'm with them right now. They're good. They've come up with new accounts. They still have the old accounts there. Like, you can still buy the old ones. I'm kind of curious to know what happens with my payout next week on the expert account. I'll let you guys know, keep you updated. That'll be another video. So I got one coming probably tonight, and then I'll post a payout video next week at some point. But I'll be curious because they've discussed the profit split changing from 90 to 10, or for me it's 90 to 10 now, to then 80 to 20. Which I'll be curious. I'm assuming the old accounts will still have the old payout rules, but we'll see. We'll see what happens. The core accounts are the best value for money across any prop. 66 US with discount codes. I'm not affiliated, but 66% or $66, sorry, with discount codes, which is nothing for an account, no activation fee. Less than 100 Australian dollars for an account. So if you pass that, you've got an account for $100. You could get 5 accounts with them now, $500, which is nothing compared to other prop firms these days. Even TopStep, you'd be paying Australian dollars, like at least $250 for one account total. So it's pretty cheap. But sometimes it will sweep and continues going down, and sometimes like today will reverse. Exactly. So today, like I was saying, I thought we're going to go down more, but once we form this and then form the change in the state, the market showed its hand. So at this point in time, I'm just kind of following the order flow. If price here continued to move down, I'll just wait. But when price reverses, I now am more interested because that fits my narrative. If price started to go down like this, it doesn't mean I'm going to jump in shorts. It just means I'm going to wait for my entry model. That's what I'd say. Because, yeah, it's just, otherwise you're going to think you have to take every move. No, you don't have to. The amount of moves I missed out on that move 100 points, crazy. Heaps of moves. But trust me, there'll be moves where you catch those 100 pointers and they'll be great. So you just got to you got to balance it out, is what I'd say. And just work with it. So if price started to come down, I just say to myself, okay, I've got to wait. Because we started to reverse and form the change in the state, now my entry model is presented. So it's worth discussing. Following a diet or exercise, yeah, exactly, yeah. You just got to have a plan and stick to it. The more you stick to it, the more results you'll see. And then you'll have confidence that you can come back from losses. But if you don't stick to it, then you won't have confidence you can come back, and you won't progress. Everyone has their own issues to manage. Like for me, and in terms of copy trading, I prefer trading on separate accounts, on 3 accounts. So I'll have one for Asian, one for London, and one spare account. For me, that works good for psychology and emotions, because what I can do, whether I win or lose an Asian session, I've still got another account to trade on. And typically for me, I'll go live with the Discord, have a chat through the market there in London. Asian session, I'll trade personally, but post like screenshots and sometimes analysis for the premium members too. And so it allows me to spread my risk. But for other people, they want to copy trade, that's fine. I mean, it just depends what works for you. So I haven't started dabbling, but Cam, ever since now they've released that those new plans in My Funded Futures, I've kind of got an idea to maybe try and pick up 3. I can only have 5, but pick up maybe two of the core accounts with My Funded Futures and copy trade them. Because I want them all to be the same size. So that could be something there. Would rather take 1 A+ setup per week than trading every single day. Yeah, 100%. 100%. Less stressful. My wife's filing for divorce. Manny, I'm hoping you're trolling. I'm assuming you're trolling, but follow your rules in general. Everyone, it's important. But we'll call it there. Nice having you guys here. I would study this. This would be probably uploaded pretty much straight away. I'll just change the thumbnail. And we'll do these on a regular-ish basis. Mainly London sessions, sometimes Asian, we'll see. But I also might do some YouTube lives just discussing certain things. So, you know, even discussing My Funded Futures accounts or payouts, that kind of thing, you know what I mean? Just taking you through the process, that's fine. And that way you can have a look at that. So, all the best, guys. Enjoy your nights, enjoy your afternoons. We'll talk soon.